Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, February 16th, 2024. Hope everybody's doing well out there. Hope you made it through this week safe and sound. We had some volatility this week. We had a 5-point weekly VIX intra-week spike. We saw some selling pressure. We saw some heavy volume at the start. So lots to talk about. Let's get into it here. Russell 2000 leading this week. This was nice to see. This is something we spent some time talking about in last week's video, making the case for some small cap outperformance, and we did get that this week. On the flip side, we've got the Nasdaq 100, which appears to be starting a little bit of a digestion process here. We're going to look at the charts in some detail in just a little bit. This goes hand in hand with sort of the market really resetting itself a little bit on what the Fed expectations are. You know, when we entered into 2024 at the tail end of last year, the expectations were in 2024 we were going to get like 7 or 8 rate cuts as early as starting in March, and now we're 6 weeks into 2024 and we've got half that number, and March is almost off the table, written off altogether, and we're now looking at May. And so the market has still done well in 2024, right? We are still higher in price. We have continued to rally here, but the expectations of what the Fed is going to be doing here in the short to medium term have been coming down, and I think that is a good thing. We're going to talk a little bit more about that in this video. Talked about the VIX spike. NYSE Composite Index closed at weekly closing all-time highs. I don't think you're going to see too much chatter about this, but we're going to look at this in a little bit. And of course, we've got the last of the Mag 7. NVDA is out there this week coming on earnings, and it's going to be a big one. Let's get into it here. Stick around. Let's get into it. All right, here we go. We've got some charts in front of us. TC 2000, that's the charting platform we're using. We do a lot of cool things for this platform. So we build custom indicators for traders that use it, custom stock scans, write some custom scripts. So if you need anything built out, we've got layouts, we've got a lot of quick start tutorials and guides and education for this charting platform. Check us out at thetraderisk.com. We also have a referral code in the description of this video. Should save you some money on a new subscription to TC 2000. Let's get into the numbers here on the week. If we look at follow my mouse up here, you can see 3 of the 4 of the US indices here were in the red. Nasdaq 100 was the hardest hit, down 1.54%. The only thing standing green this week was the Russell 2000, up a little bit over 1%. If we take a look at the 1-month returns, though, it's not so bad, right? We've had a very good run here, and despite the Nasdaq losing 1.5% this week, it's still up over 4% over the last 30 days. So that's nice to see. The Russell 2000, though, is in the lead now, up 5.8% over the last 1 month. Look at that 1 year, though, right? Big difference here. So small caps have been underperforming for quite some time, perhaps a little bit of catch up. If we take a look at volatility here, everything was up this week. So Nasdaq vol was up almost 2 points. VIX S&P vol up a little over a point to 14.24. A little bit of a healthier number. We were getting pretty low, pretty sleepy, pretty complacent there. So nice to see a little bit of a shakeup. Let's take a look at the sectors this week. You can actually see that most things were in the green here. So energy, materials, and utilities were all up this week, anywhere from 1.5% to 3%. On the downside, again, it was really technology that was absorbing a lot of the selling pressure. Consumer discretionary, communication services rounding out the bottom 3. If we take a look at our sector trends this week, again, top left is technology. You can see despite the underperformance in the sell-off this week, the trend has been so strong in technology. Our smart trend filter indicator here, prints green, yellow, or red dots depending on trend strength, is still showing, yellow here has not produced a sell signal. So that goes to show you how much strength there is. Same thing for communication services. It was an underperformer this week, and we're still seeing green dots here. So lots of prior strength. It's going to take some more selling pressure before we start to see some of these trends reverse. I think that makes sense. That's something that we typically see in those strong markets. Take a look at materials down here. You can see starting to transition up, getting some fresh buy signals this week, and materials has been in a downtrend for the past 30 or so days. So that's nice to see. Not a whole lot of other changes here. You can see biotech trying to turn up, energy trying to turn up. We'll see if we get those signals next week. Now, speaking of market breadth, if we take a look here at the percentage or the number of stocks hitting 52-week highs, per number of stocks hitting 52-week lows, we still more or less like this ratio. So again, I think when folks are looking at the headlines this week, they're seeing S&P 500 down, they're seeing the Nasdaq 100 down, but when we're looking under the hood here at market breadth, we actually still see, again, not an exciting ratio. It's not as strong as I would like to see, but we're still seeing kind of more of the same here over the past 30 days or so. We've seen breadth start to pick up here. This is kind of goes hand in hand why we were making the case that the Russell 2000 was sort of set to play a little bit of catch up. Notice if we're looking at the number of NYSE stocks over a 200 SMA, this is flatlining here. It's not rolling over hard. So you can see there's still just a little bit of resiliency here. And if we look at this NYSE Composite Index, again, you're not really trading the NYSE outright, but this is home to thousands of stocks in this universe. You can see if we throw in a weekly chart just to clean this up, we just reached and tagged new weekly closing highs, eclipsing the 2021 highs here. So there is something happening under the hood that might get missed amongst the top level reporting this week. And I think it is notable, and it is part of the thesis here that we started talking about and started to get a lot more vocal about last week on some of the small cap outperformance on at least a relative basis. And we're going to talk about, how can the market sell off, but small caps do well. We're going to kind of hold both those thoughts in our minds in just a moment when we look at some of those charts. Let's move on to IBD though. So Investors Business Daily, shout out to them. They are a sponsor of the show. So thank you, Investors Business Daily. This is their top 10 stocks on their IBD 50 list. And you can see a little bit of sell pressure here as well from a lot of these names, although GCT still putting up some pretty big numbers here, 55% winner. So if you want those big winners, you want that curated list, check out a link in the description. You can support the show, support IBD with a link in the description to get access to their lists. Now, if we move over to commodity land here and we look at the strongest to weakest, we've got Bitcoin at the top of this list once again, 9.28% on the past week. That's a 31% gain over the past month. So we've seen some nice progress there. And Bitcoin, another asset commodity that we were talking about last week, is pretty bullish on, continues to work right now in this environment. Copper, silver, oil, dollar, all up this week. On the downside, it was gold, but it did rally off of its lows. DBA taking a bit of a breather, and natural gas is just cascading into some of the lowest levels we've seen historically, going back decades now. So it's getting quite I guess I'll call it cheap. I don't know if cheap necessarily implies that it is worth buying, but it is certainly cheap from a historical basis in terms of, just where it has been. Now let's move on to Treasury yields. So this is, of course, now market pricing in higher for longer, let's call it, or stickier inflation. Well, yields continue to remain sticky here as well. You can see, for instance, across the maturity, everything was up this week. Didn't quite take out new cycle highs, but we're getting back up towards those highs in the 5-year, in the 10-year, in the 30-year, right? We're starting to eclipse and continue to rally here. So this is, of course, what the market is pricing in, grappling with, and digesting right now is just how much how much longer, how much higher are we going to be? And we're going to continue to keep an eye on these charts. So let's get into some of the price action this week. This was the weekly chart here for the S&P 500. So once again, as you can see from this weekly candle, if I zoom in, we clearly drove off of the lows. We closed nowhere near the lows of the week, but we certainly don't have the most optimistic, the prettiest looking candle here. But again, I have to say, gotta zoom out and look at this run in its totality here. Since October, since the November lows, we have been as vertical and as straight of a line as you really could picture here for a S&P 500, right? It's not a stock chart. It's not an individual company. I mean, this is 500 of the world's largest companies, and this has basically been parabolic here over the past 3.5 months. So some weekly digestion is got to be expected at some point. And if we look here on a daily chart of the S&P 500, let's go to the SPY for a second here. We can see, for instance, this action on Tuesday. This was after the CPI report came in hotter than expected, aka the market pricing in that the Fed might not be moving so quickly in March or May, based on stickier inflation numbers, right? Because the Fed wants to see that inflation stay low, consistently low, before they start to move down their Fed funds rate. When we get hot inflation, that starts to muddy up the waters a little bit. So we got this nice kind of knee-jerk heavy volume, so some of the heaviest volume that we've seen on a down session here, and we saw this across all markets. But as we saw from Wednesday's action, is we did not get any immediate follow through. In fact, we got more of a bounce and kind of recovery into the gap. Thursday, more of a bounce. In fact, got a new closing high here for the SPY on Thursday. And then we sort of kind of, rolled over a bit on Friday, or just kind of gave up a little bit of action. Didn't quite go for that third day up in a row and new all-time highs. So the S&P 500, based on this, seems like it is setting the stage perhaps for a little bit of range-bound activity. That seems like the path of least resistance right now, and would just be, in my opinion, again, just something very orderly, healthy, and constructive, right? If you're someone that is looking for fast gains in the next, week or two, and you're, wanting higher prices in stocks, well, it might not be the best thing for that type of trader. But I think if you're looking for a more sustained rally over the next months and rest of this year, you sort of want to welcome in a little bit of digestion here and kind of shaking the tree, let's call it, in terms of some of these stocks. So for me, the S&P 500, I think the levels are pretty clear now. We've got the highs from Monday before the scene of the crime, right? Before we got that big inflation, that big CPI number. So we've got the highs here around 403.60. I mean, if the market comes out of the gate swinging with a gap up or challenging the highs here, and we start going right back on the path of making new all-time highs, it's certainly going to be a tough thing to fight. I would not be, wanting to step in front of that and be aggressively short or being too stubborn. But I think if we stay below this, if you're an active trader that wants to have on some tactical short exposure here, or maybe some hedges, or maybe you raised a little bit of cash. I mean, if you're shooting against the highs from Monday, it's very tight. You're looking at, 70 bips, less than 1% away, right? I mean, you could make a case to see if this can roll right back over to the 490 area. And if this starts to break, then we can look at a deeper correction. We can look at maybe a retest of the January-December range, but we're not there yet. And right now we're inches off of highs. And the thing that continues to, I see is just, yes, we are extended. Yes, there are lots of valuation reasons why we could make the case that this market needs to sell off, but sentiment does seem to be very jumpy on wanting market corrections and wanting the markets to roll over, and it's sort of anecdotal sentiment data gathering that I do here when I talk to traders, or if I'm looking across Twitter and X and social streams. but it is something to call out that the market just is in a bit of a tricky space, and it looks like some two-way trading here makes a lot of sense, especially as the market waits for, I know it's one company, but NVIDIA next week, that might be just a holding pattern to see what happens there with that stock. So I think with the volume gap down pattern, with some of the behavior that we've seen here, some digestion makes sense. Let's go to the Qs. Very similar kind of situation, little bit more of a bearish outright look here, or at least, again, just a look that is really kind of suggestive of some digestion is in order here. We had that gap down on Tuesday. We grinded higher Wednesday, little bit less so on Thursday. And now look at Friday's action here. Took out Thursday's low. This looks like it wants to roll a little bit here. This looks like it's a bit heavier. Take a look at the back-to-back selling days here. Nasdaq 100, undoubtedly looks a little more tired than, say, the S&P 500 at these levels. I'm paying attention to this as a short-term level as well. If we start giving up this high here from the late January, aka a little more follow through, the Nasdaq 100 looks to me like it wants to probably come back down and maybe retest it at sort of minimum the 417 zone. This would not surprise me whatsoever. And once again, even if it gets down to 417, this is still an incredibly healthy, bullish, strong long-term chart. I wouldn't start getting concerned on the Nasdaq or start looking at bigger levels until we're below, call it 405 or so. So we've got some distance, and even a correction, again, down to 405 is about a 6% correction in the Nasdaq 100. In my opinion, kind of bring it on. Let's get a little bit of a shakeup here. Let's get some better prices in some of these leadership stocks and these quality companies that are growing earnings. Let's get a little bit more of a value kind of purchase play. So for me, Nasdaq 100 certainly looks tired. And again, let's keep the old highs in there. If this just wants to start going and we start taking out 438, 439, or even on a closing basis, this 436 area, then I think you got to respect the uptrend, and it's off to the races. Russell 2000. Okay, so here is where things get more interesting. So again, on the weekly chart for the Russell 2000, it was the only of the majors to finish up 1.16%. It did it on heavy volume. Let's go back to that daily chart here. This was a big drop on Tuesday, and this did it on some of the heaviest volume I can pull back on this chart. This is one of the heaviest volume traded sessions here, and so we saw basically, buyers kind of step right back up on Wednesday, and on Thursday, we actually took out the Tuesday's high. So you can see just that relative strength is just continues here in the short term, right? Certainly not in a longer term session, not in a 3 month, 6 month, one year window. The Russell 2000 has been absolutely, left behind in the dust. But over the past now couple of weeks, we're seeing more relative strength. So Russell 2000 still appears to be one of my favorite places to be. I'm still making the case that this can be challenging this December highs here, and look for a breakout over 210 would be pretty significant. Really, it's closer to like 206 if this 208 if it starts to break out from this longer term range. It is going to be a tough spot if all these mega caps start to roll over. If some of those big Mag 7 stocks roll over, it is undoubtedly going to put pressure across the whole market. Really, what you're looking for is relative outperformance, and you're looking for this 190 area to basically hold. If this has to check back again to the 195s, so be it. But if it can, again, start putting up some accumulation days where buyers are stepping in on these sell-offs, and then it can, eventually work itself out to a breakout later this month, that's, certainly in the realm of still a good chart, constructive chart in the possibilities, and would still be kind of in this realm of the call that I'm looking for. But Russell 2000 looking good here, and we'll see how this follows up. Something we talked a lot about last week, so I'm not going to go and rehash it. So I think that's kind of everything on the majors there. Spent some extra time today just dissecting the short-term levels, but keep an eye, of course, on next week in NVIDIA. We're going to talk about some of the Mag 7 charts in just a little bit. Let's take a look at the VIX. So the VIX here, again, there's that big 5-point spike. We were up to 18 on Tuesday's session. So there was a good amount of fear that came into this market really quick. So some hedges got put on, some puts got bought, right? There was protection put on here. We drifted back down into the low 14s, but I do think that this is just a healthier reading. Again, get a little bit of a shake up here. And a VIX that's between 14 and 17 or 14 and 16 is a pretty, is still a market that I think would be a decent one to trade and find some more opportunity. If we look at the IEFs, this is the mid 10-year kind of treasury bond, and you can see this continues now in its pullback mode here. This coincides with higher 10-year treasury yields. So IEF, again, look, this chart doesn't look terrible if it can find a higher low here, sort of on the sooner rather than later, area. I would say about 92.50 or so. If it checks back to here, that's kind of as deep as I would love to see this pullback. But I do still think we could be, range bound, or at least trying to put in a bottom here for treasury bonds if we can, kind of base out and find some support, above 92.50 or so. So right now, still in pullback mode. We'll see if that happens. TLT, kind of similar situation, kind of new pullback lows here. But if we can stay above $89, $90 in TLT, I think there's some hope there. Dollar index continues to be strong. It was up again this week, but a big tail at the top end. So you're still seeing, again, this goes directly with rates here, but King Dollar really needs to roll over. That would help the Russell 2000 case as well. We'll see if that happens, but for now, dollar remains very strong. Let's talk about Bitcoin real quick. IBIT, it's the iShares, the BlackRock's version here of Bitcoin, one of the new ETFs that got approved on January 10th. You can see just had another stellar week here. It was up 9%. Nice follow through week. All-time weekly closing highs. The flows have been very impressive. You can look at FBTC, which I like trading and owning as well. I have positions, full disclosure, in both of these, FBTC and IBIT. Still looking for higher prices here, generally speaking, for Bitcoin. It's covered a lot of ground. Again, I wouldn't hate some consolidation here in the low 50,000s for Bitcoin, but the inflows here, the catalyst of just the ETFs and the pent-up demand that I think we're still going to see trickle in here has some long-lasting effects. I also think, of course, with the Bitcoin halving coming up in April, that also helps to the case. There are lots of interesting, I think, bullish catalysts here. I've been talking a lot about it, posting on X, did a live stream with Aaron, and have been, really sort of vocal about this thesis here that Bitcoin seems to be just in a good sweet spot. And eventually, I will turn bearish on Bitcoin. I will sell Bitcoin, and the trends will break, and those things will change, but for now it still looks pretty darn good. Worst thing going for it right now is just that it's extended, but right now everything looks pretty good. And with that, let's get into some of the Mag 7. I wanted to at least address this because we talk about sort of a bearish disposition there on the Nasdaq 100. Here is the Mag 7 stocks, and this is just a line chart. So I'm just, instead of using candlesticks, I'm just looking at a line chart of all these stocks, and you can see that most of them now are sort of petering out. There's not much that's in a, I'm on a 1 hour chart. Let's switch that over. Comments still apply here, but you see daily chart, you're seeing things peter out, like here in Apple, right? You're seeing things, Tesla, of course, has been in its own world, Google weakening up, Microsoft now getting a little bit weaker. You really have two companies, or three, I guess, NVIDIA, Meta, Amazon, that are still acting pretty darn strong. Meta going for some new highs, NVIDIA, of course, next week. So let's take a look at those two. If we take a look at Meta, you can see that this on Thursday started to make new closing all-time highs, pulled back a little bit here on Friday. This seems, again, just maybe a little bit lackluster. It's trying to still inch up here, but it doesn't have a tremendous amount of momentum behind it. I still think a positive consolidation here is kind of a reasonable path forward. This is NVIDIA here, and this is, again, tried to make new highs on Friday. Earnings next week, lots of expectations. Again, this company is up 50% this year, not because it's reported earnings yet, is because of all the other companies that have basically, talked about their AI strategy, talked about their investment in everything that they're investing in, GPUs and servers and everything else. So NVIDIA here is, clearly kind of front running a lot of its expectations. The numbers are definitely going to be good. It's the guide, and it's, can this continue to run? Can this continue to accelerate? That's going to be the question. I certainly would not want to be short into this. I did a live stream with Aaron earlier in this week, and he made the case that the reward to risk here is just not favorable, and hard to argue with it, but I certainly wouldn't want to be short it either. So for me, this is if you've got position here, congrats, trail a stop, know your position size. Maybe you're selling some in, taking profits into the report. But it's a really tough add on a new trade here, long and short, in my opinion. It's equally as dangerous. So going to be an interesting one, and will certainly impact a lot of maybe perhaps what the Qs do in this range and how deep, and this will probably give us more clues as to maybe how long this consolidation might go on for. If NVIDIA blows out and we totally gap up and it shrugs off and it can muster up another leg higher, you're going to see the Qs start to take out these highs, and the game gets played more as we stretch higher. If it disappoints and we fall back into this range, then it's like, okay, we have more weeks ahead of us of consolidation. That's kind of the early kind of stages of how I would frame it out. So that's what I got. Lots there to think about. As always, welcome your thoughts, comments. What are you looking at? What am I missing? In the comment section below. Thanks again for tuning in. We've got links in the description, TC2000 links. We've got IBD links. We've got a couple of other things. We also have a new trading system that we are releasing, and I'm going to have more details about this soon. This is the very sneak preview for you that made it this far. There is going to be just like a wait list if you want to hear more about it. It trades Bitcoin, it trades Qs, it trades ETFs. So it's a new trading system that we're really excited about. I've been trading it personally, but now it's moving into public production. So check out our website. You might see it up there. It's called Galahad. You can jump on the wait list. I'm going to be talking more about it in the coming weeks. So that is it for me. Thanks as always for tuning in. Have a great weekend, and we'll see you back here next week.